Most important thing is to not own debt assets which are subject to inflationary pressures. It's not if you're buying an inflation indexed asset, that would be fine. They're inflation index bonds, but to not own assets which will lose their buying power because there's a lot of debt and has to be printed. The second is to create a diversified portfolio of assets, a well-balanced. If you diversify well and you look at the correlations between asset classes, you'll see that one thing goes up, another thing goes down. For example, during times of greater inflation, you see commodity prices, gold, real estate prices. You see those types of assets perform better at the expense of other assets. And also the stock market has parts of the stock market, these different stock markets, which are not primarily going to be hurt by investments. There's many that benefit by inflation. So to create a diversified portfolio, diversification is of paramount importance because it is the way that you can maintain a good return without as much risk. In other words, for example, if you pick investments that have about the same expected return, but they're not correlated, and you put them together well, you can reduce up to 80% of your risk without reducing your return. So how to create good diversification is very important. That includes country diversification.
Okay, so diversification remains very important. But Ray, what would the changing world order do to currency? Historically, dollar has been the storehold of wealth and world's leading foreign exchange currency. Do you see this shifting to Chinese renminbi or the cryptocurrencies like Bitcoin?
All the currencies are now fiat currencies. The dollar, of course, is the leading world's reserve currency. They are related to each other. No country wants, in this environment of relative depression or relative lower prosperity, no country wants to see its currency go up too much. So the fiat currencies, there tends to be a fair amount of printing of money and then a lowering of that. The cycle that I saw was brought about by seeing three important forces that I hadn't seen in my lifetime before, but happened many times in history, which is why I needed to study that cycle over the last 500 years. First, as you point out, when governments run out of money, they need more money than they can get. They create a lot of debt and they print a lot of money, and it debases that money. We have had the largest debt increases and money creations, particularly in the leading world's reserve currency, the dollar, although that's been true in the euro and it's been true in the yen too. And that has a big effect. The second of those influences is really a political and social influence, which is the conflict between the left and the right. Populism, often, typically, due to large wealth gaps and opportunity gaps, which exist in the United States now. And so you're seeing a conflict, you're seeing almost a civil war, because as you have populism consists of people representatives who will fight rather than compromise, fight for their way of doing things. And so we have an ideological and economic differences that are also political differences that you could see every day reflected in the news. And you saw become in January 6th that the issue of losing. I think we're in a situation where we can have an election in which neither side accepts losing. And so we see that reflected all the time, such as the Supreme Court ruling on abortion. You see that type of conflict. That conflict, the measures, I like to measure things, is the greatest since 1900. And that also relates to the economic one I touched. And then third, as far as the changing world order, is the relative decline of the United States and rise of China and other countries. India, for example, of course, has improved its position, many countries. So that when the New World Order began in 1945, world orders come after a war, and then the victors in that war determine how things should go. When in 1945, when the United States won the war, it was the richest country in the world. It had 80% of the world's gold, and gold was money. And it had half the world economy, half of world GDP. And it had a monopoly on the military power, and it was the dominant world power. And that's why we have the United Nations in New York, the IMF and the World Bank in Washington, D.C. And that relative positioning, there's been a decline in that relative positioning and the emergence, particularly of China, as a great power. And so there is a great power competition taking place. And traditionally, through history, that is resolved by conflicts. So we have 5 different kinds of wars that happen, and we're seeing them now: a trade war, a technology war, a geopolitical influence war, a capital war, and a military war possibilities. So that confluence produces these difficult periods. The last one was 1930 to 1945, and that's what we're in the midst of. So it's very important for me as a global macro investor to understand those, and that's why I did this study. It affects my positioning today.